Joining me now is Sam Vadas, Schwab Network contributor, to help set up the action today. Sam, thank you so much for yesterday for allowing me to have some rest.
Big shoes to fill.
Oh, that's too kind of. That's very, very kind of you. You're across all of this with regard to the trade policy, and now we're beyond that conversation of when, or we're at the beginning, I should say, of the conversation of when will we have more than the framework of a deal, an actual deal.
Yeah,
right?
So we have a deal, and the timing of this is really interesting as to why Japan, as far as getting this across the line. Certainly we had the elections over the weekend, as far as Prime Minister Ishiba losing that majority in the upper house as well, and so no doubt there has been a lot of suggestion out there that he wanted to get this across the line as well before that August 1st deadline. So no doubt Trump was in a bit of a hurry to sort of get this across the line with Japan. But we have $550 billion worth of investment now in the US committed to, as well as a 15% tariff rate. So the good news is that is not the 25% that we were talking about a few months ago, but it is higher than the 10%, of course, that was the baseline. So another piece of good information that has come from this is that there are no volume caps, which could be a positive thing for the auto industry. And if you just take a look at the market action overnight, as far as Asian equities, European equities rallying, the Nikkei 225 was up considerably, thanks to the likes of Toyota, up about 14% or so. So no doubt we're going to see some follow through when it comes to US equities, particularly those that are exposed to the optimism around a trade deal like this. You think things like agriculture, for instance, rice, but also when you look at auto parts as well. When it comes to the FDI part of the conversation, I was listening to Besant this morning, and he was been talking about, Diane, that this is going to be new capital. I think that's important to reinforce into strategic areas where the US knows that it is vulnerable, and that was very much highlighted by COVID, and that very much has been the MO as far as Trump is concerned. That's what he wants from some of these deals as well. It's not just about the tariff rate, but it's what are you going to do for me?
Yes.
Will you invest in the US? I know that that's been a lot of the conversations to do with China as well. So you've got $550 billion worth of investment into the US as well. I think, the good thing as far as what the markets are, how they're reacting to this. I was listening to Liz Ann Saunders this morning, who's saying that this removes the uncertainty now, because to also Julian Emmanuel's point this morning, who was also speaking about this, the markets like certainty.
That's right.
But it is also about the psychology here, because if you look at a 10% rate, has 15 become the new 10? And that's what a lot of the market conversation has been about as well. But, we've just got so used to these big numbers being thrown out there,
right.
25, 30, 40%.
Right.
The 15% doesn't sound so bad in the scheme of things. So what's next? Obviously, moving this story forward, the next cab off the rank, no doubt, everybody's going to be looking at the EU.
I was going to say that. I mean, and that's, that looks like that will be a trickier tightrope. Although Japan obviously wasn't easy. Scott Besant has had to make dozens of trips to Japan to move the ball forward, but EU feels like that's going to be much trickier.
Yeah, and Besant was talking about this morning, saying that perhaps what we're hearing as far as what the EU side is saying, because there's this report out that they're talking about potentially a 30% reciprocal tariff on the US. That is according to a Bloomberg report. That Besant's view on that, as he was asked about that this morning, is that is perhaps a negotiating tactic to get the US to the table quicker, because we've only got 9 days until that August 1st deadline. And, a lot of the conversation this morning has been around whether the EU would swallow a 15% tariff if that was the rate that they were going to agree on. But they've got the surplus. That's what Besant was sort of talking about, while the US has the deficit, and so that could potentially hurt the EU more. But I mean, you're talking about if they, going to have a 30% tariff rate on the table. I mean, this is going to hit industrials, the likes of Boeing, etc. So US-made cars, bourbon, whiskey, all the likes of that. So I think also the next one to watch is obviously China too. They've got a bit of an extension now. They've got a bit of breathing room, but Besant is going to be heading also to Stockholm to be talking to his Chinese counterparts too, and whether they can get some sort of commitment as far as that FDI is concerned as well is going to be important to watch.
Let's talk a little bit about it, because obviously this is pushing the needle forward in terms of bullish momentum in the broad market, right? We're looking at S&P minis up approaching 0.5% now, but on the flip side, we have micro mover stories, right? Like Texas Instruments, that stock's skidding right now, more than 9%. And some of that has to do with worries about tariffs, right? In terms of their conversation on their earnings call.
And it's been interesting across the board as far as, GM yesterday, who we also heard from, who was warning about tariffs. And that seemed to be, the concern certainly from investors is not about the earnings beat or the revenue, because that was the positive news. It really is about some of the margins pressures. But when you come to Texas Instruments, the conversations very much has been around the fact that the expectations were just so high heading into some of these earnings, particularly for a company like this, where we've seen the optimism very much around the chip space and that demand story offering a tailwind. I mean, you've got to consider that this stock was up some 40% in the last 3 months, up 15% or so for the year. So the guidance was really the worry here, it seems, because it was mixed for Q3. So you had EPS slightly less and the revenue slightly higher. So that's where it was a bit of a split picture as far as what they were talking about, Diane. But I think, what these stories and these reactions are telling us in the market right now is you've got a trend where the bar is just so high for some of these companies, particularly in the space of semiconductor chips. Stocks have had just such an incredible run up that anything that falls short of some of these expectations, even if it's just a fraction, you're going to see a bit of a ding to the stock. And that's what we've seen with the likes of, for instance, NXPI, who we were talking about yesterday. It was a bit of a similar story with regards to, the beat on the top and bottom line. Some of it is about the guidance, the forecasts that they're giving. So, tech companies seem to be getting punished, even though they are beating the street's estimates, with the view here that the street just sees it as not good enough with some of the softer guidance.
Speaking of trends, you know where I'm going. You know exactly where I'm going. The meme stock, Frenzy, it's back. Kohl's was initially a little bit higher in the pre-market. Now it's ticking just a marginally lower, off like 0.5%, but who knows? But that stock shot up more than 35% yesterday, right? You have the meme stock craze coming back. There's a couple, it's not the AMC and GameStop this time.
No, but it's giving GameStop vibes, and that seems to be what the conversation is around. But it is really the latest meme play, isn't it? And it seems to be down to the fact that these retail investors have cottoned on to the fact that there are just this, these short positions, a level of short positioning around Kohl's right now. It's not a fact that they're buying it on any of the fundamentals or a tangible story here, with regards to things like its partnerships. It's really down to the fact that there is this level of short interest. So it is being compared to GameStop. It's really interesting. It drove up the stock yesterday to the point where we actually had to have a halt in trading from a technical standpoint. But, it's not just Kohl's. I mean, there's been this retail FOMO conversation in the market for arguably a number of weeks. I've seen it in some of the notes from the traders that have been hitting my email, my inbox, and meme names have been up some days on some news and some days just up on no news. And quoting traders that I've seen who've been sending me some of this stuff up on no news just because they feel like it. I was talking about a company just a few days ago that was QuantumScape, which is in the business of the technology behind lithium batteries for EVs, and there was no news that day. And so we were talking about this company. It was a bit of a head scratcher up to why it was rallying so hard that day. And some of the traders have been sort of saying, well, this is down to a bit of the retail FOMO that very much has been evident in this market.
And one other name that I'm seeing buzzing that's hitting this potential meme stock frenzy, Krispy Kreme. The stock is up more than 30% in the pre-market and it gained more than 25% yesterday. But Sam, we'll leave it there. That's Sam Vadas, Schwab Network contributor.